Hi everyone, this is Tim Melvin coming to you from down here in Central Florida again. I'm a day late with this as always, although more and more I refer to it as the video I'll do sometime this week rather than on a set schedule because I never seem to make any sort of deadline. Anyway, in last week's Fed announcement, Janet Yellen expressed concerns over geopolitical conditions, and that was one of the big reasons they gave for not raising rates. I really think that she's quite correct to be very concerned about those things. Now, the nation that everybody's pointing to is China. And of course, my tightly held belief is that every number that China sends out at any given moment in time is completely fictional and is designed to serve some purpose of the long-term plans of the Chinese government. I don't trust them, folks, and that's why I never invest in Chinese equities that are listed even in the United States. But right now, it is in the best interest of China for us to believe that their growth is slowing, and they are supporting their stock prices for reasons that have served the long-term interests of their nation. If that ever changes, they're just going to let the market fall and wipe out all that lovely Western capital that's invested over there. But in fact, it does appear that China is slowing, and certainly concerns about China growth since they've been such a huge player on the world economic stage. It is a legitimate concern. My concern really right now, and I think the Fed as well is looking at this, Europe is just a mess. Now on top of it, we've got the Volkswagen absolute disaster with the emission control scandal. And of course there's talks of fines and punishing the company, but they better be careful. There's tens of thousands of jobs involved all over Europe and even here in the United States. So pushing down on Volkswagen too hard for this infraction is frankly not going to be in the various government's best interests. Yes, slap them with a fine, tell them not to do it again, punish them in some ways. But if they fine Volkswagen out of existence, which may seem unlikely, but we're talking about government officials here, folks, so don't discount the possibility, that would add to the mess. The biggest problem that I see in Europe right now is the refugee crisis. This is phenomenal. Tens of thousands of people coming out of Africa and the Middle East. And I've seen refugee crises before in my lifetime, but I've never seen refugees making the type of demands on the host government that this current crop is doing. They're going to be a drag on the economy. They're not adding any productivity in the short run, but there's a lot of expense to taking these folks in, feeding them, housing them, and getting them support and services that they need. And I have to say, watching on the news from time to time, the preponderance of young men in this migratory crowd really makes us feel a little bit more like an invasion than a migration at certain points in time. This is going to be a very difficult issue for Europe to deal with, both in the short run and long term. And I think certainly there is the potential for a short-term economic drag from this. And there is a thought going around now that Europe may, in fact, have to look out and consider, revamping another round of quantitative easing and lower interest rates once again. Now, Mr. Draghi has said that not yet, but they're tracking the data. They don't think they have to take any steps yet, but they're ready to if necessary. I suspect it'll become necessary. So we'll see how all that plays out. The other big thing, because oil prices are still falling. They were down again today. And, of course, that takes oil-related equities right down along with it. We are invested in oil stocks. We have been for the better part, more than a year now. And we don't enjoy the short-term pain any more than anybody else does, but it is part of long-term investing, especially when you're a deep value investor. Now, when does this stop? Okay. In my opinion, and in my opinion only, I think Saudi Arabia has committed to this market share option. I think it would be politically and economically a huge mistake for them to back off it at this point in time. They have the resources. Keep in mind, we hear a lot of talk about Saudi Arabia needs $90 a barrel oil or $80 a barrel oil to pump it at a profit. That's not quite the truth, as I pointed out a couple weeks ago. That's what they need to balance their national budget. That anything over $27 a barrel is profitable. They can balance their budget out of their cash reserves and their foreign assets that they can sell for a very, very long time. Barring a geopolitical event in the short term, I think that we're going to be dealing with this until one of two things happens. We get down near that $27 where it's actually not profitable coming out of the ground for Saudi and some of the Emirates nations, Or more likely, what we're going to see is a lot of those $70 to $90 hedges that the U.S. shale companies had in place are going to start running off over the balance of 2015 and into 2016. And at that point, they're no longer going to be able to continue to pump the type of volume. We'll see the rig counts go down. We'll see many of these companies get into financial distress and possible bankruptcy. Then the Saudis will be able. Excuse me for 1 second, I forgot to turn my phone off. Bad etiquette on my part. The Saudis will be able to cut back on their production a bit and allow prices to start to move higher. In the interim, as long-term buyers of oil stocks, we own some. Not opposed to owning additional names, provided we can find energy stocks that are not only cheap, but are safe on our financial and credit metrics. There's not too many of those. Most of the ones we've been able to find, we already own. Favorite strategy at this point in time is when we have big down days in the oil market and the oil stocks are just getting routed. I like buying some of the closed-end funds that specialize in energy and natural resources names. Many of these are at 15% and greater discounts to their net asset value, so we're getting bargain stocks at a bigger bargain. Some of them have been around quite a long time. I don't feel like there's any danger of the fund liquidating or going out of business. Of course, if they did liquidate, we're going to make the 15 to 20% gap between the NAV and the current trading price anyway, so that wouldn't necessarily be a bad thing. I think buying a widely diversified mix, particularly of the larger energy names that are likely to survive, at a discount to the already battered price makes a lot of sense. And remember, the thing to keep in mind is I am much more worried about where these things trade in 2020 than I am over the second half of 2016. I have a lot of staying power. We still have a lot of cash in the portfolios. So, I'm taking a very long view of energy, and I'm quite comfortable that I'll end up making a ton of money from this. In the short run, it may be kind of painful, kind of like getting a vaccination shot, a little bit of pain for a long-term gain. So that's sort of how we view energy. This could very well continue. The Saudis, I think, are committed to the market share strategy. I do not see them backing off anytime soon. So anyway, what is working out there for us is small banks are still working, guys. We are just, most of our banks have held up very, very well through all of the recent volatility. We're still up double digits for the year. Closed out our 10th stock. I feel like we should have had a party or something. We finally reached double digits in the number of closed stock positions we have in the portfolio. And we sold Sussex Bank shares yesterday for a 97% gain over the average cost to our subscribers. So we've closed 10 stocks in our portfolio. The average gain has been over 60% at this point in time. So 77 out of 79 stocks that have been in the portfolio over the last 2 years, and most of them still in the portfolio today, are up. Over 40 of those are up double digits. So we're not hitting for average, but we've got a little power. We're slugging a bit too. So our biggest losers down about 1.5%. The small bank trade of the decade is still working. It's very, very early in this long-term trend. The consolidation pace is picking up, and it's going to continue to do so. This is going to be another 7-8 years of just fantastic consolidation in the community and small regional bank space. People often ask me, what happens after that? Well, what happens after that, maybe we go back into just normal times when small banks, those that have survived, are just absolute cash machines, growing earnings and dividends and assets year after year after year and pushing the stock prices up. I can kind of live with that too. So anyway, you need to be in this, and if you want to be in the community bank space and be a part of our newsletter service, Banking on Profits, our guided portfolio service is going up in price. A couple reasons. A, just for reasons of scale, we can't have thousands of subscribers. We have to limit it, so we're going to raise the price. And frankly, in order to put in the amount of time to make this the quality newsletter and educational tool that I want it to be, it takes a lot of time. I kind of like to get paid for my time. So for those two reasons, one, to limit the pool to serious investors, and B, since I can't grow the subscriber count at a rapid count, I still want to get paid for my work. So for those two reasons, we're raising the price. It's going up to $1,000. You have 1 week to get in at $3.99 a year, and if you take advantage of that, folks, you are locked in at that $3.99 a year rate for the rest of either your or my life, whichever one comes first. So maybe we'll tie. But anyway, I think that's a great deal. It's a chance for you to get in and be involved. And I want to stress that we try to educate investors as much as possible. I got an email from a guy the other day, and he told me that, just using some of the things he'd learned from my weekly newsletters and our resource guide that becomes part of the portfolio, he'd found a little local bank in his area and, kind of kicked the tires, and he bought a few hundred shares. And he told me yesterday that the bank had gotten taken over and he'd made something like 70%. Those are my favorite stories. I like it when you guys make money on my stock picks. I love it when you take the information that you've learned from the newsletter and use it to make a few picks and big profits for yourself. So it's the Guided Portfolio Service. I think I do a great job of educating people on how to profit from small bank stocks over time. $3.99 a year is an absolute bargain price. You subscribe over this next week. Remember, you lock that rate in for life. You also get the regular Banking on Profits monthly service for free, again, for life. I think we charge $99 for that product. That's just kind of an overview, and we kind of drill down on a couple banks and give you some industry information and goings on, that sort of thing. But that'll just be included as part of your subscription for free for, again, the rest of your life, as long as we publish the newsletter. And I have no intention of ever retiring, so that should be a long, long time. Anyway, the price goes up first day of October. You've got until then to lock it in. We're going to have a lot more for you on small banks next week, because we are going up to the FIG Partners Community Bank Conference on Monday and Tuesday of next week. I'm really excited about this. Haven't been to Atlanta in years and years and years, so I'm looking forward to going up to a great city. I'm going to see some old friends for dinner while I'm up there and talk to a whole bunch of bank CEOs and other analysts and investors about what's going on in the community bank space, and we'll be bringing all that information back to share with our subscribers next week. And believe me, some of it will bleed into these videos as well. Anyway, that's about all I've got down here in Central Florida. I can tell by the lovely aromas wafting up from the kitchen that dinner's just about ready, so I'm going to go get some of that. And I will talk to you guys next week. Have a fantastic week.